Brian Sozzi's favorite kind of a take has to do with retail, of course, and he's got a duo of retail takes to talk about today, I guess, because we had Dick's and A&F to talk about. So Dick's Sporting Goods coming out, beating estimates. Brian, what stands out to you? I guess some similar themes that you talked about with Foot Locker, right? That maybe kids going back to school and buying stuff.
Yeah, this was a blowout quarter from Dick's Sporting Goods, and I can't say that I'm surprised. I've spent the past week and a half, 2 weeks in these stores looking for golf shoes and new golf clubs. I didn't get much from there. Why? Because the inventory was very sparse and the prices were high, so I got them elsewhere. Nonetheless, sales versus the first quarter of 2019, I think that's the better comparison here for investors to focus in on. Sales for Dick's Sporting Goods up 52% versus first quarter 2019. Obviously, keep in mind all the stores were closed. A good part of the stores were closed in the first quarter last year because of the enrolling out pandemic. But overall, I mean, Dick's also out here raising its 2021 operating margin guidance. On the high end, they could hit 10.3%. In 2019, again, going back to 2019, their operating margin was 5%, so an almost doubling of operating margins potentially for Dick's Sporting Goods this year versus 2019 is very intriguing. And Julie, this is something you mentioned, yes, we talked about yesterday with Foot Locker. Dick's noting that the return of team sports, notably schools and kids getting back out there playing baseball, golf, you name it, that is a big drive. That was a big driver of their business in the most recent quarter. And as we talked about yesterday, I suspect it will be a big driver this back-to-school season for a Foot Locker, for Dick's Sporting Goods, Nike, Under Armour, Adidas, all those companies that play in the kids' sporting goods space.
Yeah, and they also called out in their press release, home fitness continues to be a driver for a Dick's Sporting Good. I mean, I think if you have the ability to bring some of your fitness routine in home, you realize how much easier it is to actually follow through with. Now, Dick's is not retailing Pelotons, but there are a number of other competitors that have similar enough equipment that Dick's has certainly been selling and been selling out of, Sozzi, as you noted, given the inventory levels. Also, just, guys, an interesting story longer term. I mean, look at the chart over the last really 7 years. Go back to 14, 15. It hit a record high for the first time and was just a troubling retail story. It's not exactly levered to the malls, but it's still kind of levered to, kind of a mega strip shopping type location, because usually it's a big flagship store. Maybe it's not an interior mall, but they have a large physical footprint. And that was really a challenge thesis for the company. The stock got back to that record level that it had hit, again, 6-7 years prior, really in the fall of 2020. And now it's broken through, and what a beautiful looking chart it has been over the last 6 months once it got through that prior record high. And so I think also another name, guys, that can drive or that can ride the wave of some of this. We don't want to overplay the trend too much, but there is a suburbanization happening to an extent across the country. And I think Dick's probably a brand that's well positioned to benefit from some of that rebuild or continued build in that element of how people want to live.
Yeah, you guys remember?
Yeah, go ahead, Julie.
I was just going to say, you remember when Sports Authority went under and everybody thought Dick's was going to get a huge lift from it, and it didn't materialize, right? At least not immediately, certainly. So that's what that chart brings me back to that. Just quickly want to pivot, though, to another name that we're watching. Maybe this benefits from suburbanization. I don't know. Also, Abercrombie Fitch is what we're talking about. I remember the last time we talked to the CEO, she was talking about its new social tourist brand, which had a tie-in with a couple of TikTok influencers. Apparently that brand did well for them. And they reported a surprise profit, Brian.
Yeah, again, I'm going to use 2019 numbers here. I think that's the most relevant. And on that basis, Abercrombie saw sales up 6%. They were up 18% in the U.S. Gross margins, always a good indicator for all of retailers, up 290 basis points versus the first quarter of 2019. One interesting stat here with Abercrombie, and I think this is part of the reason why you're seeing the stock up close to about 14% right now. They put up these type of profits. It was a very strong beat, despite having 20% less gross square feet. Essentially what that means, they have closed a good number of stores over the past 2 years, notably these giant, large flagship locations. They noted in the press release today, they closed one recent one in Singapore, giving them 5 flagship locations around the world, down from 15 in 2019. So that has brought costs under control. At the same time, sales have gone up, and that is a good recipe more often than not come earnings day.
And you're going to be talking to the CEO, right?
Yeah, that's tomorrow. Abercrombie and Fitch CEO Fran Hart's back on the morning show in the 10 a.m. hour. Looking forward to catching up with Fran.
Me too. Looking forward to hearing that.